Welcome to today's report, the 27th of August, 2025. Right, today we're going to talk about rate cuts. They are coming in September, why crypto could surge, and why it might happen or might not happen immediately, this crypto surge. Now, the thesis for this is September 2025 Fed rate cut is now the base case. History suggests that easing cycles, not single cuts, often precede powerful crypto bull runs. Now, the exact month of the first cut is often messy. Think of this more of a regime change and not a one-day catalyst. So what a rate cut actually does is this. Number one, cheaper money. Bank companies, investors can borrow at lower costs. Looser financial conditions, credits is easier to get, debt services burdens fall, and more cash sloshes around. Now, also in lower real yields after inflation, safe bond pay less, and the gap versus risk assets narrow. And then you have the higher present value when discount rates drop. The Mets used to value long duration, high growth assets like tech and crypto as a high beta cousins give higher prices. So why crypto in particular? Crypto is a high beta, liquidity sensitive asset class. When safe yields falls and liquidity rises, investors reach for risk. That rotation can amplify flows into Bitcoin, Ethereum, and the broader market. Now, how crypto react to the Fed rate cut? When we chart out the Fed's rate move alongside the total crypto market capitalization, a clear pattern jumps out. The start of a Fed rate cutting cycle has often coincided with the beginning of a crypto bull market. So in broad terms, lower interest rates mean cheaper capital and a shift towards risk-on appetite. Investors no longer able to get high yields from safe assets tend to seek better returns in stock, tech, and notably crypto. This dynamic was on full display in recent years. Example is like the 2020 pandemic cut in March 2020 as the pandemic hit. The Fed slashed rates to near 0% in the aftermath, an unprecedented wave of liquidity flooded markets. And the result, a massive crypto bull run through 2020 and 2021. Bitcoin's price exploded from under 4,000 in March 2020 to a then record high around 69,000 by November 2021. The total crypto market cap grew exponentially during this zero rate era, illustrating how cheap money can fuel speculative assets. And there's another later one in 2024, the rate pivot after harsh crypto winter in 2022. When the Fed was rapidly hiking rates, the Fed stance began to soften in 2023 and initiated rate cuts in late 2024. Crypto markets responded strongly. By August 2025, Bitcoin had blasted to new all-time high of 124,000 as traders anticipated easier Fed policy. According to Reuters, Bitcoin's 2025 rally has been powered by increasing certainty of Fed rate cuts alongside renewed institutional buying. The total cryptocurrency market capitalization swelled from roughly 2.5 trillion in late 2024 to over 4.1 trillion by mid-2025 as monetary conditions loosen, right? So but we need to look into like the very, very short term. What does it mean? Because not every cut boosts crypto right away. Now, to better understand the nuanced impact of Fed cuts, it's useful to zoom in on specific months when rate cuts occurred and see how crypto prices move during those individual months. Now, recent history gives us several data points, particularly from the Fed's mid-2019 to early 2020 cuts and the late 2024 cuts. Here's a rundown of Fed rate cuts months and how the crypto market fared each time. So first is the July 2019, the Fed's first rate cut in over a decade. Now, so overall, the crypto market performance was negative. Bitcoin actually fell sharply in late July. It dropped from around 13,000 prior to the cut to under 10,000 in early August, a short-term drop of roughly 25 to 30%. The initial Fed easing was not enough to overcome other market pressures at that moment, and crypto ended the month lower. And then in September 2019, another quarter point cut by the Fed. Crypto market performance was also negative. The crypto market continued to be sluggish. Bitcoin and major alts declined through September. Bitcoin fell from 10K range down to 8K by the end of that month. Now, the October 2019 Fed cut rates again. This time, however, the crypto market performance was positive. Crypto rallied. October 2019 saw a notable Bitcoin price spike, including a single day 30% jump in the month, partly on positive blockchain news. The overall crypto market closed October in the green. Now then, moving on to March 2020, emergency rate cuts, including a huge 0.5% and then 1% cut, bringing rates to 0% amid COVID panic. The crypto market performance was very negative, extremely negative in March. It crashed in mid-March 2020 along with equities. Bitcoin plunged by over 50% in a two-day panic sell-off. Of course, this was an extraordinary situation. A global crisis was unfolding. Notably, after March, crypto quickly rebounded and entered a bull market, but March 2020 itself was a brutal month for prices. Then in September 2024, the Fed's first rate cut after a long pause, right? So that was a positive result. By this time, sentiment had flipped bullish, and the crypto market rose in September 2024 alongside with the Fed's pivot. Investors were clearly looking ahead to easier conditions. Then November 2024, another Fed cut. The result was also positive. The crypto market had upward momentum and notched another monthly gain in November. And by December, we had a third consecutive Fed cut. This time, however, the market performance was negative. In December, crypto prices cooled off and pulled back despite the additional rate reduction, perhaps due to year-end profit taking or the fact that markets had already priced in the cut. So as we see above, all of these 7 rate cuts months, roughly 3 were bullish for crypto and the rest were bearish. In other words, it's been a toss-up. A Fed rate cut by itself did not guarantee a green month for Bitcoin or the broader market. So why were the reactions so mixed? The context matters. In some cases, a rate cut came in response to deteriorating economic conditions, which can hurt risk assets in the near term. Now, the big crypto run-ups in prior cycles often materialize a few months after the rate cuts began, not necessarily in the exact month of the first cut. Okay, so for the conclusion, a September 2025 Fed pivot is historically bullish for crypto, but timing and patience matters. The big moves tend to follow easing cycles, not a single cut. So if the Fed begins in September and follows through with multiple cuts into year end, it meaningfully raises the odds of a powerful uptrend, just as prior pivots in 2020 and 2024 aligned with major rallies. So markets are already leaning that way, and a policy reversal would unwind 2022's biggest headwind, which is tight liquidity that erased more than 2 trillion from crypto. Now, lower borrowing costs and fewer attractive yields alternatives typically push capital back into REITs, including crypto. A September cut doesn't guarantee an immediate surge. reactions can be muted or even negative if the cuts is priced in or growth worries linger. Well, the cycle is what counts. If the Fed delivers 2 to 3 cuts between September and December 2025, that easing should create a strong tailwind and could kick off a crypto spring in late 2025 with a follow-through into 2026. Now, the bottom line treats September as a pivotal bullish signal with effects that may lag by weeks to months. Stay patient and position for a potential breakthrough by the year's end if easing proceeds. Okay. Now, the key point here is if easing proceeds. But the narrative is also very important. So if coming into year end, though even they are cutting as well, but the narrative generally is negative, saying, I give you an example, if the jobs continue to deteriorate further and at a larger scale, this is not a good thing, and that would dampen the growth of the S&P 500, the expectations. And maybe Q4, for example, they give a very bad review on the AI earnings. That is also another bad thing. All this thing can dampen the growth of the US stock market, and by that also the crypto market. So you need to understand the narrative as well, how it plays. But nevertheless, the market expects the cut to happen in September. And from there, with the further understanding of the dot plots, the market could then predict how many cuts is coming in 2025 and what is expected of 2026. From there, we can plan further. But whatever it is, be vigilant with the changes in the market. But for now, yep, the bullish signal is in effect, and let's see what brings us in the coming weeks. With that, that's the report for today.